Welcome back. Now, I did say before the break that we'd unpack exactly what has happened this week, so we'll get a look at the week that was on point. And of course, some of the big issues to have come out was yesterday's number. Now, a week ago yesterday, we saw the South African Reserve Bank decide to keep interest rates unchanged. They're at 6.75% for the repo rate, 10.25% for the prime lending rate. And one of the reasons was because they believed that inflation won't necessarily go too much higher, and indeed that was what happened yesterday. We saw the number come out at 4.5% for December. So as you can see, a slight trajectory there where it dropped down to 4.5% from around 5.2% for that inflation number. So certainly helpful to their cause as a whole. Remember that this is the target band, but of late the messaging by the South African Reserve Bank has been that they'd like to keep it at that 4.5% mark, which is the midpoint of this 3 to 6 target band. Now, the dotted line over here is 4.7%, and that is the average inflation for 2018. And that is where inflation has stood for South Africa this year, which means that they would love it to stay in that mark. And as I note there, it is at 4.7%. This is in comparison to some other economies around the globe. Look at that. Japan at 1.3%. Venezuela, an absolutely staggering 200,000% when it comes to that inflation figure. It reminds you of just where Zimbabwe stood a few years ago as well. The likes of Nigeria, the likes of Brazil as well, key economic partners for South Africa, certainly struggling as well with their inflation numbers. Deciding where they want to put it is obviously quite key and quite significant as well. The likes of China at 2.3%. The United States have tried to keep this number at 2% and clearly unable to do so. So the average numbers there for 2018. That's on the economic front, of course. And let's get into some company news now. Some company news to have come out this week. The likes of Vodacom having come out with news. But we'll start off with Shoprite, where there was a deep drop after they produced a trading update earlier this week, which didn't show a great picture. As I was speaking to Warwick Lucas as well a little bit earlier, it shared the sentiments around how consumers are struggling with the local economy and how it sits at present. So that massive drop as that trading statement came out earlier in the week. But as you can see, there's been a steady recovery right back to around 185 Rand a share for that price. But of course, still not sitting at around 200 Rand or more, which is where it perhaps should be and where investors may want it to be. Of course, suffering as well going through 2018 as things got bad. But here's a company that also suffered pretty much a similar stance. Consumers getting in on a particular special and a deal and then leaving at a later stage. Vodacom sculling over 300,000 subscriber numbers, and that's certainly hurting there as they produce their trading update. That's for the third quarter of the year. A big fall there in their customer numbers, and that has hurt that price, bringing it back towards 120 Rand a share on that front, where it usually sat just above that 130 mark. And this is just this week. So clearly, the influence of these stock numbers would depend on just how consumers are faring, how consumers are feeling, and how things certainly will be. Now, it's been an interesting form around the week just with regards to equity news and as well some economic news. And that is the week on point. Now, world leaders, business and civil society met in, of course, Davos, Switzerland this week. And that was to try and shape global, industrial and regional agendas. This is happening on the back of worries of slowing economic growth around the world, damaging trade wars, and even Brexit. Speaking to SABC News in Davos, President Cyril Ramaphosa said government will continue with its endeavor to create policies that will treat all citizens equally.
The president says South Africa will soon be embarking on a massive drive to ensure that young people are trained in digital skills, which will lead to more jobs. Ramaphosa says the country has about 14 million young people in primary schools as well as in colleges and universities. He says the spread of digital education will ensure better training. Also this week, Stats SA data shows that consumer inflation slowed down to 4.5% in December from 5.2% in November. The biggest driver of the annual deceleration came from the transport category on the back of lower fuel prices. Inflation is expected to remain contained at about 4.8% average this year.
This is good news for consumers. It means that interest rates are unlikely to rise in the first half of this year at least. In the Reserve Bank, following their meeting last week, they intimated their quarterly projection model suggested that there will only be another 0.25% hike in interest rates between now and the end of next year. So that is good news for consumers who are heavily indebted. For those who are relying on pensions, it means that they're not going to get as much as they would have if interest rates rose.
The BER consumer confidence in the fourth quarter remained unchanged at 7 compared to the third quarter. Analysts say most consumers are fairly optimistic about the outlook for the economy and their own household finances. The November business cycle indicator is down slightly. Reserve Bank data shows leading business cycle indicator came out at 105.5 compared to 105.8 in October, down minus 0.3 month on month. Next week, Stats SA is expected to release the producer price index for December. Gloria Sefako Musi, SABC News, Johannesburg.